Hi, my name is Sam Price, the Crypto Lifer, and today I want to start a trading journey with you, and I'm going to start giving you one video every few days, parts of my strategy, so it's not all at once, so you can understand how the market moves and what's happening. The first thing we're going to start with today is the 21-day moving average. I'm going to teach you how to add it. I'm going to teach you how to use it. I'm going to teach you how to identify possible areas of entry by using one indicator, the 21-day moving average. What is the 21-day moving average? It's if you took the daily of any asset in the world, and at the end of every daily candle, we get a value, open, high, low, and close. We get a close at the end of every day. We take that value, we add it up for the last 21 days, and we divide it by 21. It gives us a number. For instance, if we took all of Bitcoin's values the last 21 days, divided by 21, the average of the 21 days is 83,253. So that's the average. Bitcoin likes to expand away from the average and come back to it over and over again. That's basically how price action works. So how would you add a moving average? Here I have the 21, the 50, the 80, the 100, and the 200, but we're only going to use the 21. All right, so we're going to hide that indicator. We're going to go up here to indicators. I'm on the Bitcoin USD chart, which is Bitcoin USD all-time history index. I'm going to type in MA, moving average. Okay, simple, a simple moving average, not a weighted, not all the, a simple moving average. I'm going to click on that and it defaults to the 9 for whatever reason. And so what I'm going to get is a 9 simple moving average. I'm going to click on the settings. I'm going to go to the style. I'm going to make it white. And then I'm going to go to the inputs. I'm going to make sure that I turned it to 21 days. The length is 21. Okay, everything else is the same. Time frame, yep. And wait for time frame closes, yep. Inputs and status line. And there we have it, the 21-day moving average. Now, what you want to notice about it is, let's look at all the pumps that we've had recently for Bitcoin. And you can see where the entries are. So right here, Bitcoin was forming a falling wedge. All right, and it was hanging out with the 21. You can see price action was on or near the 21-day moving average. But all of a sudden, a lot of people got in. They basically pushed the price up. It got extended to an area where it was a little higher than it normally was. And what it would do is it would gap away from the 21. See how price action moves away from this white line? That's key. Whenever I see price action like gapping far away from the white line, I know I should start to think about taking profits. Here, we would get in here when the moving averages are tight and they're on the 21. But when we pump up and we're away from the 21, this is a good place to take some profit. Here, anywhere in this region. Eventually, price comes back to the 21, pumps up. It can even lose the 21, gain it. Here's another key area, tight action. We break up, the time to get out is away from the 21-day moving average. Another assessment here is to get in here when the moving averages are tight. We're tight on the 21. Oh, here we kind of gap up. You sell here, we get away from the 21-day moving average. And you'll see this over and over again on multiple time frames. The time to get in is when you're on or near the 21. The time to get out is when you've gapped away from it. You're going to come back. Look, and every time you punch out away, it's crazy, but I teach my students this over and over again, and we can do it in a very zoomed in fashion here. But what you can see is every single time we pump, back to the 21, back to the 21, even a little pump, back to the 21 there, back to the 21, huge pump, back towards that 21, huge pump, back to the 21. Back. You can assume 99% of the time, if you're in a trade and it's up huge, you candle, oh, and you're feeling that euphoria and you're gapping away from the 21-day moving average. And what will happen is once you learn divergences, you're going to find bearish divergence when you're gapping away from the 21-day moving average, and you'll come back. So right now I've taught you that the best times to get into any asset in the world is when this white line is touching or near price action. And the best time to take profits is when you're away. Now this is Bitcoin. And you'd say this is the daily, but I don't trade the daily, Sam, or I swing trade. I work a lot. I need to swing trade. I can't stare at the 1 minute. So I would tell you to do this on the 4 hour and above. Find when price action's near the 21 like today. Bitcoin, all weekend, it was near the 21-day moving average. Then it had a huge pump. You sell when you're away from the 21. That's a perfect sell. Get in when you're on the 21, sell when you're out. Now we're looking for price action. If it's bullish, it'll consolidate above its previous resistance. And now, so now we see that there was resistance right there. Resistance. Now we want to see this get tight and come back to the 21. As price comes back to the 21, it's going to give us our next entry, and then boom, impulse, it's going to skip away from the 21, and that's our next sell till we get back to the 21 again. This will happen over and over again in succession on every asset in the world. I studied this for over 12 years, and I put it on every asset, and I've been watching it play out live over and over again to the point of no return. This will help you in your trading style. This will help you over time. And while I'm giving you just one indicator, because I want this to be an evergreen video, you could play this over and over again. Anyone could watch this video 10 years from now into the future. You know, you could travel back in time. No, but this video is timeless, and I'm going to teach you why it's timeless. Let's go look at the Japanese yen. I just put out a trade for the Japanese yen. The time to get in was when we were close to the 21. We've pumped up. Now this may continue to pump even more, but even there is a good impulse. That's a good pip right there for the Forex traders. They just need a move like that. You're likely going to come back towards that 21, or the 21 is going to pull up. The price action is going to consolidate. Look, it did it here too. And this is the Japanese yen, nothing to do with Bitcoin. Pumps up, back to the 21. The time to get in here was when this flag was on the 21. Stochastics were low, boom, to the upside. All right. And again, I'm going to take away everything else but the 21 so you can see what I'm talking about here. Eventually, as this series progresses, I'm going to add more things to the chart. The next video in this series, I'm going to be adding the 200. All right. And I'm going to slowly add as you go. So if you come here each week and learn, you're going to get these evergreen videos. They're going to teach you how to become an amazing trader. One step, one indicator at a time. Too many people are throwing too many charts, watching 1,000 things. Now, for the rest of your week after this, you want to start watching the 21 by itself. You want to start backtesting this. You want to start playing with it. So I showed you on the Bitcoin. I showed you on the Japanese yen. How about another known chart like Tesla? All right, look right here. Tesla was ready to go when we had flagged very tight, and the 21-day moving average was right there. We had pumped away for the 21. That was time to take profits. Pump away from the 21, take profits. Pump away from the 21, take profits. Every single time Bitcoin gaps away from the 21-day moving average, up here it was a high. You're taking profits. All right. Again, I'm going to teach you how to use this with the other moving averages soon, but right now, let's just start very simple. I don't want to make your mind, I don't want you to have to think too much. I want you to just take it in and not be overwhelmed. Let's look at this. Now you could say, well, I'm a scalper, Sam. I don't trade the daily. I like to be on my computer. I trade small time frames. I love me the 1 minute. I'm on it all the time. Can I do this on the small time frames? And I said, yes. Oh, yes, you can. Here we are again right here with Bitcoin. Let's just take a look at a move here. This is a falling wedge. Again, price action near or on the 21. We pump up away for the 21. We have to come back down to it to regroup. Here we get in when the falling wedge is near or on the 21-day moving average. You can see we gap, then we get far away. It's time to sell when you're away from the 21. Same thing here on the 7-minute. Price got away from the 21. That was time to get out. We dumped. Away from the 21. Time to get out. For the rest of your life, if you're in a trade and you see that you gap far away from the 21-day moving average, there. It comes after an impulse. It comes after you're touching the 21. So literally for the rest of your life, you could be getting into trades when the 21 is near or on price and just selling when you're away. Now, sometimes there may be more pump and you won't sell the exact top, but that's okay. You're going to continue to add to your gains. And that's the key. All right. I hope you had fun with this video today. I don't want to overwhelm you. It was only about a little under 10 minutes, but I want to show you how you could do this on any time frame. You could be, look, I use this on the 1 minute for Bitcoin. I get in when Bitcoin is near or on the 21-day moving average on the 1 minute. Like if I find a scalp like right there, there's a scalp right here. We were in a flag on the 21. We pumped away from the 21 when we had gapped away. And if you go back in time, you'll see it's a pretty decent gap. Like you'll be pumping and you'll be very far away from the 21. So you're getting in when price action is on and touching price. You're getting out when you're very far away from the 21-day moving average. I tell you what, with just patterns in the 21, I could trade for a living. Like I don't need any other indicator. I add other indicators to give me higher probability plays, but the idea is you could do this all right here. Again, this takes time. Demo trade this. You have to have a data set. Open up a demo account and begin to demo trade. Small amounts of money. See how this plays out. Learn how to sell when you're away from the 21. After 50 times of doing it, you're going to really love this 21. I love it because it tells me when I'm like 90% of the time I sell the local top. There may be a little more pump, maybe 3 or 4 hours later, but it consolidates and I can get back in. It's very rare I miss I sell, too early because the gap away really tells you when you're extended. I hope you found a lot out of this video and how powerful the 21-day simple moving average is. I have used it to absolutely demolish the markets for years. It's one white line. I color it white. Trading isn't easy. Nothing is easy in life. We just have to follow some strict rules and keep our emotions out of it. Thank you so much for watching. Please comment, like, and subscribe. Hit the bell for notifications. You can find out when I post this next video because I'm always putting out content that'll teach you how to trade. And I may be the crypto lifer, but you could trade any market in the world: Japanese yen, the NASDAQ, the stock market, gold, silver, oil, corn, you name it. You can trade it. I can teach you how to trade any market in the world. I backtested all the knowledge I learned to trade Bitcoin I took from the regular markets. They are not different. They are all the same. God bless you all. Thank you so much for being here. And I'll see you on the next video. Crypto is life and trading is life.